Welcome back to Rich Dad StockCast. I'm your host, Denney, and today we're getting into the core of what actually creates financial freedom, cash flow. We talked about it on the last episode, but we thought we'd dive in just a little bit more. Most people think wealth comes from appreciation, buying something, hoping it goes up, but real wealth, the kind that gives you options and control, is built on consistent income. And here's the part most investors miss. Cash flow isn't just about real estate or businesses. You can build cash flow in the stock market if you know how. And to break this down, I've got Rich Dad expert Andy Tanner with me, someone who teaches investors how to use stocks and options to generate income instead of just hoping for growth. And before we dive in, go to stockcastbonus.com. Grab your free investing tools. If you want to stop guessing and start building real wealth, that's where you begin. Andy, welcome back.
Thanks, Dell. This is going to be a great one, man. Great topic, central topic, foundational topic, great stuff.
Solid foundational topic, because we all need more cash flow. One of the best places to start your journey is stockcastbonus.com. Can you tell our listeners what they receive when they go there?
Yeah, go there. Well, number one, you get free goodies there. So go there and get your free goodies. One of my favorite things that people like is we've got ebooks that you can download. And those are really valuable because they're recipes for starting or organizing. Some people have started, but they're not organized. And this is a great way to take first steps in a way that's deliberate, organized, and proven to work. So yeah, if a person looks at where they are now and says, I could be better than I'm doing this right now, go there and get those ideas and they can make you better.
Oh, fantastic. All right. So let's start with the big question here, the fundamental question. Why is cash flow the foundation of real wealth?
Yeah, it's hard for us to have an episode without a goose that lays the golden egg reference, so let's just make that one right now. It is astounding to me that you can take a child with that Aesop's fable, right? And you can just take a child and say, okay, you have, X amount of dollars, and you could either buy a goose that lays golden eggs, or you could buy the golden eggs. What one you want to do? And the child will say, well, I want the goose because it makes the eggs. And then I get both. And I'm like, bingo. You want to buy a gallon of milk or you want to buy a cow? That's a real world one, right? My father-in-law bought cows instead of milk. And since he bought the cows instead of the milk, he had unlimited milk to sell, more than you could ever drink, right? Milk coming out of everywhere, right? And I remember I was doing a webinar once, and I do these webinars occasionally at no charge so people can learn, and it's an advertisement. It's a sales meeting where people can learn whether or not they'd like to be a student and become really serious and study with me and my team at the Cashflow Academy and start doing stuff for real. And, you can't expect everyone to be smart, and you can't expect everyone to be kind, because there's a lot of people that are dumb and mean in the world, or dumb or mean. And I remember I was given this goose analogy, this symbol, right? It's a symbolism. It's a story. It's a symbol that's way easy to understand. And some yahoo, is like, why are we wasting our time talking about fables? I don't want to hear about goose that laid golden egg because there's no such thing. And the fact that this dude couldn't understand the symbolism, and I'm kind of like Robert usually. I just roll my eyes and let them be poor. Why should I convince him to figure it out? But it struck me in that moment where it kind of made me angry. I said, what do you think a rental house is if it's not a goose that lays golden eggs? We have these, I should see if I could get this. Hang on a second. I don't know if I can reach it. Clear back there. These are kind of a fun little trophy that some people earn as students at the Cashflow Academy. And it's a silver, it's just an ounce of silver. That's all it is. And, it's worth what, $100 now or whatever silver's at. But this is more of a trophy and a symbol, because one of the very first things we do when we sit someone with a coach is we teach them a trade that generates an ounce of silver. And that you can actually, like alchemy, man. It's like you can click a button and get one of these, right? Get an ounce of silver. and it's just click bang and it happens immediately. To me, that is real. That's not, and you could do it with gold too, by the way, if you wanted. That's physical. That's not a fable goose that lays something. That's a real precious metal that gets reduced out of nothing. That's cash flow. So when you have skills and assets and temperament combined, you can have money be flowing towards you. And so we can talk about that, the movement of the money. We talked about that a little bit in the last episode, but it's worth revisiting here. But yeah, it's cash flow starts with buying things that produce and start money moving towards you, as opposed to just stagnant stuff. Because all you can do with a gold coin is spend it. It's the ability to get one, to not sell one, to create one is more important. So yeah, that's why cash flow creates wealth. I think better. And I think it compounds better. So we can talk about how it affects compounding later.
Okay. I do want to bring some up from a last episode. And I think it's important because as we establish why cash flow is important, I do want to kind of hit some of those misnomers about cash flow and maybe the myths and the things that people are stuck with, the bad paradigms, if you will. And one was net worth, right? Why does net worth look impressive on paper, but fail people in real life?
Well, net worth is a pile of money, right? A person is rich. I like how Robert defines it as like how long can you live without working? It's a function of time, really. And this is really, really bad because people get attached to the changes in value rather than the movement of money. So really, really separate those in your mind. Warren Buffett is so good, and he just says the same thing over and over and over and over and over. The late Charlie Munger said it over and over and over. He says, look, stock price doesn't inform me. I'm not informed by it. In other words, if I say, hey, Dell, I've got a deal and it's $1 million, it doesn't even tell you anything. It doesn't tell you anything about whether it's a good or bad deal. It just tells you what the price is. And people allow changes in price to inform them. Well, that's just emotion and opinion. That's just, Mr. Market being silly. But when you understand how cash flows through something, you understand that reveals the work that's being done. That reveals a lot more about how the customers feel about products rather than how traders feel about prices. And so I think cash flow is way more informative. Operational earnings, meaning the cash that's flowing into the business because of the work that's being done, is a far better metric than price. Far better metric to decide. If cash is flowing into a business, then I have tangible evidence. I'll give you an example. Net worth is just an opinion most of the time, because you're guessing on what something could be liquidated at. Well, if everyone started liquidating at the same time, that number would change immediately. Kraft Heinz had some impairment costs because they overvalued when they bought Kraft, when Heinz bought Kraft and they merged. One of the brands that came with that was Oscar Mayer, and they said it was worth, how many $1 billion just to say Oscar Mayer on the package. And turns out they had the SEC after a few years says, you haven't proven that to be so. You have to write that down and you have to reduce that there was no cash flowing in that whatsoever. It wasn't it listed as expense, but it wasn't. It's just what used to be worth billions was now worth less billions. And, that's capital gain thinking. When a person says they have money in their 401k, no, they don't. They have an inventory of mutual funds that if you sold them today, the opinion is that that's what you could sell them for. But the number of shares doesn't change when the price changes. So, the reason cash flow, I think, is better compounding is people think, a rate of return is growth, but I don't think of it that way. I think of cash flow and compounding as the reinvestment of profits. That to do the best compounding is to take profits and reinvest. And so instead of the price of the gold egg changing from Like, I've got a lot of gold, and it seems, I don't have any more gold today than I had. I haven't bought gold in 6 months or whatever, a year, whatever it's been. I haven't bought any more. Well, now that gold's pushing up against 5,000 an ounce, the value of it can double and triple from what you bought it at, but it's still not producing anything, and it still sits in the same location. Doesn't move. It just seems to be worth more. Am I getting rich? But it hasn't changed my cash flow one bit. So the only way to harvest that would be to sell it. Well, how do I reinvest it at the same prices? I have to wait and time it and hope gold drops. It's just not as viable as having an asset. People just think, this is going to go up. The stock's going to go up. The Bitcoin's going to go up. The gold's going to go up. And that's fine. But it's not nearly as valuable as having a goose that lays an egg that buys another goose. Now you have two that are laying eggs. The third egg comes twice as fast, the third goose, right? Then the fourth one comes really fast because now you got 3 laying eggs. The fifth one comes really fast because you got 4 laying eggs. And so the number of doors that you own increases. The number of shares that you own increases. The number of ounces you own increases because you have things that are creating more doors, more ounces, more shares, because your cash flow is reinvested. So cash flow compounding is much different than capital gain compounding. Much different. And I think there's a reason why people migrate to capital gain in the world instead of cash flow, and why they're misguided. I think there's reasons for that.
That's good. That was actually a good lead into a question I had: is why do you think that is? Why do you think people, the orthodox models, are focused on appreciation as opposed to cash flow? Who's behind the curtain doing this?
It's human nature. It's laziness. It's interesting how people think about labor and work. I wrote a little bit about this in Forecast, not much. I touched on it, but think about this biblically. You have this paradise of Garden of Eden, and they break the rules and they eat the apple or whatever the fruit is, and they get kicked out. And work is introduced to the world as a punishment. And that's how people think about work. And I think that's incorrect, actually. But it says, by the sweat of your brow will you earn your bread all the days of your life till you return to the ground. You're going to deal with noxious weeds to afflict and torment man. You're going to have to get on the plow and sweat and work. Instead of being in this garden where you didn't have to, everything was spontaneous. There was nothing to bother you. There was no, everyone's singing Kumbaya. You just walk around and pull stuff off the trees and eat it. You don't have to farm anything. There were no problems, right? There was no toil. And the number one thing that separates the Garden of Eden from the reality we live in is toil. And most people have had to toil. Some people have been slaves and done nothing but toil. Monarchs and peasants, pharaohs and slaves. And we frame work as a 4-letter word that's dirty and awful. So if you go to the Serengeti and you watch the most primal stuff, you'll see a cheetah and it'll stalk the weak one. And the best thing it finds is a young little fawn that has a broken leg and can't run, and it gets something for nothing. It gets a meal without having to expend calories. So survival, we're wired to be attracted to something for nothing. We're attracted to something for nothing. And that's why people get caught in the advice culture. When they say, Andy, should I buy gold? And I say, yes. Oh, great. Now I know what to do. See, they didn't have to learn. They didn't have to work. They didn't have to throw it. They just, okay, now I know what to do. And that something for nothing is interesting. Think about these words. Capital gain is another word for getting a gain without doing anything. You bought this thing and then you sat there. You didn't do anything and it got more valuable. That is a primal, awesome, get rich quick, no work, blah, blah, blah. Well, what does Warren Buffett say? They have this general accounting principles total, the GAAP total, GAAP, generally accepted accounting principles total, GAAP total. The most important number in that GAAP total is operational earnings. Now, what's an operation? That's doing stuff. Oh, great operation. This guy's operating this equipment, and this equipment's operating, and the cars are operating, the delivery truck's operating, and we got stuff working. We're doing work. And as a result of the work, we earn our money. We don't gain it, we earn it. So capital gain is a mentality that the day traders click, up. It seems like it's something for nothing. Charlie Munger might have said this best. If all you do in life is become wealthy by buying little pieces of paper, it's a failed life. There's more to life than being shrewd in wealth accumulation. And the thing at the Berkshire meetings, they're so awesome. They're so proud of the work they do. And they have the products out there, and they say, we're proud. In the cash flow Jack in the Box, the crank is the most important thing. Now, I look at work differently. I don't look at work as a burden. I look at it as an opportunity because it's fun. I mean, my wife, she likes to work out. Now, I don't like that kind of work. She does. But she likes to work out. She likes the feeling of her muscles. There's a feeling of accomplishment. There's a feeling of service. There's a feeling of just earnings, a balance. There's a feeling of equity. It's actually inequity, because the only time someone is going to give me money is if I'm giving more than I'm taking. If they don't see that's worth more, then they're not going to make the trade. So I always have to give more than I take, and you make it up in volume, right? You serve, the more people you serve, the more effective you become. So, guys like Steve Jobs would wake up in the morning and they want to go to work. Buffett, he finally said, I got to step down as CEO, not because I want to, but I just can't dunk the basketball like I used to, right? I'm in my 90s, and it's tough for me to do the work I want to do. But great basketball players, they play for the love of the game. Michael Jordan, the rumor is, I don't know, you'd have to ask him. Rumor is he had a love of the game clause that said I could play anywhere I want other than another NBA team. In other words, if I drive by a playground basketball game and I want to go in and play because I love doing it, I get to do that, and there's nothing you can do to stop me. They're like, well, we're paying you all this money. Love of the game clause. Love of the game clause. So I don't look at work as a penalty. I don't look at work as a, some type of sentence. It's an opportunity to earn and to gain earnings. And I like to participate in the lowest way, which is ownership, and build that work and earn the money from a dividend, which is taken from earnings rather than an increase of price. So that's why I think people go after capital gain, because it's get rich quick with no earning. It's just gaining. I bought something, went up, I sold it. There wasn't any work to be done. And I think work is rewarding. It's one of the things I worry about AI is, it's replacing the work that we do. And how do you have the feeling of a job well done if AI is doing all the jobs? I know that when I had a wealth freedom challenge last week, Del, and we had thousands of people come, and we got on Facebook in a closed group, and we had about 1,500 people in the Facebook group, I think, and another, I don't know how many on a Zoom in our VIP, and so it was a couple thousand people. And we did some great work, and my team did some great work, and people's lives were changed. And the letters we got just in that 1 week challenge where we took people, I mean, people were clicking and getting paid for the first time, and learning how to get these ounces and stuff, and at the end, I just told my team, freaking job well done, man. That work was worthwhile. So cash flow and earnings is about the quality of work that is making the world a better place. And you earn the money instead of just gain it.
That is fantastic. Well, let's do this. Let's take a quick break. Listener, if you've ever felt stressed watching the market move up and down, it's usually because your strategy depends on price and not income. And when we come back, Andy's going to explain how cash flow works inside the stock market, why this is where the disciplined investor separates themselves from everyone else. And don't forget, go to stockcastbonus.com, download your free tools and resources. This is how you move from speculation to strategy. Stick around. We'll be right back.
So far, it's been great. I needed a source where I could really enrich my education through stocks. I didn't really have an avenue for it, and it's helped me a lot. The simplicity has really gotten me on the track to where I enjoy the learning as well as it's really solidifying in my mind. And like, they're not just trying to sell you something, they really care about the people that are in the course, and they really do care about you and your personal goals, and what you want to do is to help you and your family and whatever your goals are in life through that. So it's really been great.
Welcome back to Rich Dad StockCast. Andy, let's get practical. How do investors actually build cash flow using stocks?
Well, there's 3 or 4 primary ways to do it. The most basic way that people poo-poo too often is called a dividend, which is the counterpart to a distribution in real estate. So think of it this way. My wife and I invest in, let's say, a syndication in Texas, and so each month that 250 unit complex or whatever produces rents, and they have an NOI, and then they pay everything else, and they have a bottom line, and then you can figure out what the cap rate was, which is what the price is compared to what it generated. And they take a certain portion of that, and the powers that be say, well, we might keep some of this and reinvest in renovation or whatever. But the profits get divided or distributed among the group, owners, the many owners, or you could even call them, stakeholders or shareholders or investors or whatever. But that money gets divvied up or divided up or distributed or dealt out or whatever D word you want to use. Well, the stock market is the same. It's just a bigger game. Instead of maybe a multi-million-dollar enterprise, you have multi-billion and now trillion-dollar enterprises that create massive earnings, and they distribute them. And usually there's so many shareholders that when they distribute this out, you might say, well, I'm spending $100 and getting $1 or 50 cents. And they say that's not very much. Well, they don't take in account of inflation in that. And I always use ExxonMobil as a great stock that, they paid a dividend 40 years in a row and increased it 40 years in a row, right on their 38, whatever it is, around 3 to 4 decades. It's gone up every year. Like this last year, it went from like 99 cents to, I think, $1.03 is what it is, right? Every quarter. So, $4.12 or whatever it is a year. And that's fine. If you bought it today, you spend, let's say it's $100, it's fluctuating around 120. Let's say it's $100 and you get this, $4 a year. So you got a 4% dividend, let's say, or 3 or whatever it is. But what if you bought it at 40? Now you have a 10% return. So it's so funny. People are so dumb as they look at the price of the stock and say, is the stock going to go up in price? And they get all excited about the stock price moving. But they look at the dividend and they poo-poo it as if it's never going to be any better than it is today. And the fact of the matter is, if you get a company that's growing the dividend all the time, let's say you bought it at 100, and someday it's it's $10 a year. Well, there you have it, right? There, it could get there, and it eventually would if the trend continues. So you've got to speculate on price. Well, great. Well, you should also look. Well, the price of a stock hasn't gone up every year for 40 years, but the dividend did. So which is more solid? So dividend investing, I'm a huge fan, and it's the best in a crash. Because, and this is why I picked up so much Exxon and COVID, is they have this track record and this commitment and the ability, most importantly, not just the commitment, but the ability to increase that dividend all the time because their business grows. Well, all of a sudden it drops into the 30s or the 40s. You have to buy now because now the dividend is sick. And who cares about it going from 40 to 120 because you're going to sell your goose? I want the cash flow. Now, that's the first way. Now, just do some covered call writing. You can learn that from us in 2 weeks. Learn the rules of it. Don't learn what it is. Oh, I know about that. Or are you proficient at it? Are you doing the best you can at it? Are you really good at it? And that supplements. So let's say you get another % a month, just like a % a month, which on an investment like that, if the premiums are tied, slightly out of the money at where it is now, those premiums are way higher than they were when it was at $40. So you can be less aggressive with where you sell your calls, and your ROI based on initial money put in, initial investment, which is the ROI formula, initial investment or final investment minus initial investment is ROI. Well, my gosh. Now you've got a 20% return on investment. And if this stock someday goes to 200, and the dividend keeps going up, and it just gets, the inflation of the market gets better and better from a cash flow standpoint. Of course, you can do the same thing with puts on the same stock, and you can accelerate this by leaps with a covered right, and just you can increase the cash flow, however you want to increase it, based on your sophistication. But I'd say the best ways to cash flow stock are dividends and premiums, and stack the income is what we call it. Stack those on top of each other. And next thing you know, you don't have to sit with your, brain in the clouds hoping the stock price moves. Because I don't even care where that price goes, man. If I collect the same premiums pretty much and same dividend, who cares? I could care zero where price. Go to CNBC then. And now, what price is up? Oh, this price fell. Oh, the new index is up. And it's not about that. It's about cash flow.
Speaking of cash flow and option trading, we were just talking about options there a second as we were talking about covered calls and puts and whatnot.
Yeah.
I think it's important for the new investor to kind of do a little terminology there. My final question is this. If someone wants to start building cash flow in the stock market, learning about dividends, learning about cash flow, learning about click and get paid, what's the smartest first step they can take this week?
Well, the smartest is to do something, not nothing. And, do whatever you want, but do something. Here's a bunch of things you could do as any manner of first steps. Take a risk and go buy it and learn from the School of Hard Knocks. I put a lot of money in the School of Hard Knocks, but I did learn. It was kind of painful, but I did learn. And I got to tell you, it's better to say yes than no, as long as it's not fatal. Even if you say yes to something and it doesn't work out, as long as it's not fatal, who the heck cares? And you're never going to have, you're never going to hit the ball that you don't swing at, and you'll strike out, but get in the game and start swinging the ball. My coach, Rick Majerus, used to say, it's good to be in on the action. Win or lose. Like, I'd rather be on the freaking floor. Like, we got the second round of the NCAA tournament, and Rick Pitino's Kentucky Wildcats ran over us like a freaking steamroller. I mean, we just got killed in the second half. They had Jamal Mashburn, great. But I'll tell you what, I'd rather have been in that game than not. It isn't like because I lost the game, this is a shitty ending. We lost. We didn't win the national championship. This sucked. All of it was for nothing. I regret I even played. Hell no. I'm thrilled that I had teammates. I wasn't even that good. The minutes I got weren't near what my teammates got, but I'll tell you what, you're part of the action. So do something. Do anything as a first step. I don't care what you do. Another thing you could do is, if you don't want to buy stock, well, then at least go to practice. If you're not going to play in the game, get a practice account, start practicing. Now, you can't lose any money, but you can't make any either. But it is doing something, right? You're at least doing something. You're moving. Another thing you can do is get a mentor, which would be even better. We have a thing called a mentor club. This would probably be the one I'd recommend the most. Just go join it. It's not that expensive. Contact us and just join it. and say, you know what, I'm going to watch a guy who's really good at this do it every week and copy what they do in your paper trade account and learn it by someone that's just, okay, here's the stock, here's how we found it, here's the price we're buying it at, here's the price the option is going to sell, here's why, and just do that. And in 52 weeks, you can't be the same person. You're becoming a different person. 52 weeks of that, you are a different human being when it comes to investing, and you can either do that or not. And it's just if a person wants something or nothing, I got nothing for them, because you can't get something by doing nothing. You just can't. Another thing you could do is you go to stockcastbonus.com. That's free. Now it's not something or nothing. You got to go click and, go to the thing and read the book and get the ebook and do it. But any of those things would be better than doing nothing. So I don't know what's the best first step? Any of those. Take a first step, not the first step. Any of them are better than not doing anything today. It's January. Maybe you got some New Year's resolutions. Best by far is Mentor Club, man. Get with Noah Davidson, get with Mike Eyes, learn from people that know how to manage risk, and just say, look, I'm going to be a different human being in 2026. Really important with AI coming on. It's important to own stuff. It's important to get your shares in, because they're going to get expensive. They're going to get way expensive. Listen to me. Anyone that's predicting a market crash now, you got to think about this a little bit. Yeah, there'll be some bubble companies, and someone's going to buy a data center. It doesn't work out, and they're in hawk for the data center, and they're going to get killed. Yeah. But overall in the market, labor's becoming free. I mean, I'm a business owner. Last night, I was thinking about hiring two different people to do two different things for me. And I thought, I'm just going to see if AI can do this. Took me a little longer than I wanted. I stayed up maybe a couple hours later, but by the time I was done, AI had built something that I never could have built. I would have had to hire someone to organize the data on what I wanted to do, and I had to hire a programmer. Done. I didn't need any of it, and it was beyond beautiful. It was awesome. So, here's a moron that's creating his own apps that, if I want something done on my computer, I just create my own app for it for me that nobody else has. Labor's free. Labor is becoming free. If you have no cost to produce, what happens to the gross domestic production? What happens to gross domestic production when it doesn't cost anything to produce anything? What happens to that? And if you own companies that are using labor, I'm not talking about NVIDIA or Google. I'm talking about anything, any business. When labor comes free, what happens to the value of a business? It's like Buckminster Fuller said, you do everything with nothing. And you can either try to compete against that as a labor, or you can own it. So I'm just saying, do something, man, because the world's changing. Do something today, because the prices of a company that can produce wherever they are with nothing, forget about it. I mean, it's really going to come down where your only cost is going to be electricity, because everything else is going to pay for itself so quick. The cheapness of Boston Dynamic robots. Elon thinks you're all going to, apps are going to go away and phones are going to go away. You don't need an app. You just ask your personal robot. And instead of everyone staring at their phone, they'll just walk around with their little robot. They will. And he says, in mass, it'll probably cost you $20,000. I'll take 5, please. Probably more. I want this one doing this and this one doing that. And your cost, the only constraint will be electricity. That's the big one. You gotta have nuclear power. That's your cost, is electricity. That's it. Electricity. The kiosks are cheap. The screens are cheap. The robots are cheap. The manipulation's cheap. The perception's cheap. The cognition's cheap. The manipulation's cheap. It's just energy, man. That's it. It's just going to be electricity. If you have a company where your biggest cost winds up being electricity, man, those stock prices will just be freaking insane. And I know I'm not the only one seeing this, because companies are doing buybacks. They're like, we don't want to go public. We don't need the public's money anymore to go public. We can buy back these shares. We don't need it. We have production that we can, shares are going to get scarce. So anyway, that's a whole different topic. So what do? Do something. Better do something today, though.
Very,
there you go.
Very
Finished.
much so.
Now we're done.
There we go.
No more liquid refreshment. So now
the cup is done. The cup, but while my cup overfloweth from this conversation. I appreciate everything that you said.
Off the rails.
There we go. Listeners, that's the end of our episode. Appreciation is nice. Cash flow is freedom. And once you understand how to generate income inside the stock market, everything about investing changes. And a big thank you to Andy Tanner for breaking this down for us, what real wealth actually looks like. If you're ready to start building cash flow, not just chasing growth, go to stockcastbonus.com. You'll find free tools and education designed to help you to invest smarter and build income you can rely on. And if this episode has helped you, if it's brought you clarity, make sure you like it, subscribe, share it with someone who still thinks wealth is only about the price going up. You're not here by accident. You're building something that most people won't. So stay smart, stay invested, and we'll see you next time.
Thanks, Del.
This podcast is a presentation of Rich Dad Media Network.